Moodys, the credit rating agency, has changed Alberta's credit outlook from stable to negative. So let's take a walk down memory lane and see what has happened to Alberta's credit forecast since the NDP dropped their budget at the end of October 2015. Immediately after the NDP's catastrophic tax and spend budget came out in October, Moodys declared Alberta's budget was credit negative. That was the budget that would spell out the largest accumulation of debt in Alberta's history, plunging us $47 billion in the hole by the end of the decade. Moodys was trying to warn the NDP about the deficit spending road they were going down, and the NDP refused to listen. Moodys blamed out-of-control spending. They said, and I quote, "The lack of significant expenditure controls will maintain the province's structural imbalances in the near term and will result in a deterioration of provincial debt and liquidity metrics over the next few years, which is credit negative." Yet, the NDP refused to listen. Then, just before Christmas, the bond rating agency Standard & Poor's downgraded Alberta's credit from AAA to AA. Standard & Poor's in a news release blamed, and I quote, "projected weak budgetary performances in the next 2 years and moderate but rapidly rising tax-supported debt burden." Yet, the NDP refused to listen. And now Moodys, acting on their prior warning about the Alberta budget, has downgraded Alberta's credit outlook from stable to negative. Guess what they blamed for the downgrade in the outlook? Well, this is from the press release. Without corrective fiscal action, this will lead to higher than planned fiscal deficits and lower liquidity than forecasted in the 2015-2016 provincial budget, resulting in more rapid and higher debt accumulation across the medium term. They go on to say, under the province's 2015 budget, which was released in October 2015, Alberta had forecasted West Texas Intermediate to average $61 a barrel in 2016-17, rising to $68 a barrel in 2017-18. These prices are materially above current market prices as well as Moody's price assumptions for the medium term. So, basically overspending and overestimating the price of oil. Generally speaking, the NDP are just bad with money. The NDP have disastrously overestimated the cost of oil. The budget was calculated with oil at twice the cost it is right now. That doesn't just mean a shortfall. The NDP already promised us a shortfall of $6 billion. This means at least double the shortfall we were told we'd have. Yet, social worker turned finance minister Ceci thinks that a credit downgrade is some sort of compliment. For real. He said this, "We're pleased that Moodys reaffirmed our AAA credit rating." And then he said, "The rating agency confirmed the province's credit strengths and low debt servicing costs." Okay, I like an optimist too, but that's like saying, I'm so glad we can roast these marshmallows now that the house is burning down. I wonder how pleased Ceci will be if we ever become insolvent. At this rate, he'd be euphoric. For TheRebel.media, I'm Sheila Gunn Reid.